Hello friends, good evening. I am Nidhi and today we are going to discuss about the basic accounting terms. So the main terms in accounting that we have to use it again and again. The first of them is assets. So let's see what are assets. An asset is any resource owned by a business or an economic entity with the expectation that it will provide a future benefit. So the keyword that we can underline from this definition is that it is any resource. Resource means uh, is providing as a source for something means. Then the next thing is this: it is owned by a business. Means the business persons are spending some money in order to acquire that asset with the expectation that it will provide a future benefit. This is a very important line that why do we acquire the assets? Why we need to purchase the asset? The need for purchase the asset is that we would be able to earn some benefits. We would be able to earn some revenue from it in the future. Okay. Now the next point that we have is it is that expenditure which results in the acquiring of some property or benefit of a lasting nature or something that can be converted into cash. In a business, if we see, though we have purchased the land, we have purchased the machinery, then we have purchased our furniture, our means computers, etc. So the land, building, computers, machinery, what are these? We have kept this in our business for so that we are able to earn revenue from all these things. So that all will be called assets. ठीक है. और otherwise if we talk about the stock, तो the stock of goods we keep in the business, that is also an asset. Why that is an asset? Because whenever we want we can just sell that stock, we can just sell those goods in the market and we are able to earn cash from it. So that is also an asset. So let's see about the types of asset now. The first type of asset that we have is fixed asset. What are the fixed asset? Fixed asset means firstly we can say that they are long term asset. We are acquiring it only for use. When we purchase it, we are assuming in the starting only that we have to use it and we don't have to resell it. Okay, suppose the example we have taken earlier, the stock of goods we keep in our business in order to resell it as the time comes, and then we'll be able to earn revenue from it. But these fixed asset, we are only keeping it for our use. Machinery you are purchasing, you are not purchasing the machinery for reselling it. You are purchasing the machinery for keeping it in your business and for producing more and more goods from it and to sell those goods in the market. So that machinery or your land or your furniture, that all is meant for giving you the benefit of running your business for a longer time. So that all will be known as the fixed asset. Examples we can say land, machinery, these all are the fixed asset. Okay. This we can also say as the tangible asset. We can also classify the assets into two types. One is the tangible asset and the other one we will be doing it later. The tangible asset is, tangible means the thing that we can see or touch. Assets that can be seen or touched. Okay, so the assets, machinery or land or your furniture, these all the things we can see, we can touch, so we are going to call it as the tangible assets. Okay, now one thing more is there. Suppose we have a business of, we have a firm of computers and it's a trading firm. So what we are doing there, we are just purchasing the computers from we are purchasing the parts from some other from our suppliers, and then we are assembling it, and then as whole computers we are selling it in the market. Okay, so this thing, the computers for that business, in that case the computers will be called as the good only, because it is their stock, they are using that computers for reselling it. So that for that computer trading firm, when the computers will be treated as goods. But suppose you have business of some other thing, say you are doing some electronic business or any other you have a company, and that you are using the computers only for the employees and the employees are working upon it. So in that case the computers will be treated as fixed asset. So whether we are treating the assets at fixed asset or current asset, it all depends on on these uses. What are you going to do with that? Okay, so current asset also we have done. These are meant to be converted into cash. These assets we are keeping in our business to convert it into cash whenever we need it. Okay, example we can take a stock. Then again the debtors. What are debtors? So when we sell the goods to anyone on a credit basis, then all those persons are known as debtors because we have to take amount from them. So that all are debtors. Debtors mean the persons from whom we have to take the amount, who owes us the money. So that all persons are known as debtors. Now the next thing we have is the liquid asset. Liquid asset are again lower to the current asset only, current asset also, because they are already in cash form. It's your cash balance or your bank balance. In liquid asset, what do we see? In liquid asset, we are comparing the things in the manner that how much time will we take to convert it into cash. Okay, current asset and liquid asset we can both take into this manner, that how much time will be able to convert this asset into cash. Okay, so the liquid asset they are already in cash form or your bank balance. Okay, or otherwise such securities or such bonds or something like this that you can easily convert, means whenever you want you can just go and sell it in the market and you will be able to get some amount of cash regarding that. So that will be the liquid asset. And the current asset which needs some time, means as compared to the liquid asset it needs a little time. Suppose you have the stock of good, you are going to sell it in the market, and whatever the credit period is there, if the cash sales you are doing, then you will get the cash at that time only. If you are doing it credit sales, then whatever the amount of credit you are giving to your customers, then after that amount, after that period of credit time, you will be able to collect cash from them. So the current asset and liquid asset, there is a very small difference between them. It depends upon the time that one takes, that the asset takes to be converted into cash. If it's taking a very less time, then that is liquid asset. And if as compared to a liquid asset taking a bit longer time, then that will be current asset. And the fixed asset, we are not taking it for resale, we are keeping it only in our business, then that all will be known as the fixed asset. So all these fixed asset, current asset and tangible asset, these all are the examples of tangible asset, because whether it is your land, whether it is your stock, or whether it is your cash, so all these things, all the assets, we can easily touch it and we can easily feel it, we can easily see it. So all these are types of the tangible asset. Next we come to the intangible asset. Intangible assets are those fixed assets. Again, these are fixed assets. Why? Because we are not going it to resell in the market, but we can't see it and we can't touch it. So the best example for the intangible asset is goodwill. Now let's see what is the goodwill. Goodwill, you must have heard this word. Goodwill is the, in basic words if we say, it is a reputation of the firm in the market. Okay, so does it have a cash value? Means how can we say that it's an asset? Of course it's an asset. What is an asset? Asset is something that gives us the benefit in the longer run. In the future it gives us the benefit. So goodwill is also an asset because it gives us the benefit. It gives us the benefit because it has already created a reputation in the market of the firm's goods. So of course we are able to do more sales because of our goodwill. If we have a very good goodwill, if we have to make more sales, we'll be able to earn more profit. And in the other case, if we have a firm that has started just now, it doesn't have a very good goodwill in the market, then in that case it won't be able to earn much profit, it won't be able to earn much benefit. So here you can just see that because of the goodwill, there is a difference between the benefits that a firm is getting because of the goodwill. So goodwill also an asset and it will be classified under heads of intangible. Now the next thing that you have to start is liability. Liability, it is the amount that a person or company owes to the outsiders. Whatever we have to give to the outsiders, that is a liability. Suppose we have purchased a machinery and that is on credit, we have not paid the amount for it, so that 1 lakh will be liability upon us. Okay. How is the liability settled? It is settled over time through the transfer of economic benefits. We have to give some benefits to our creditor. What are the benefits we can give? We can give him the money, we can give him some goods, or we can give him some services. Suppose you say that 1 lakh rupees the machinery cost, you are not going to pay it in cash, you are going to give you some stock of goods, instead of that, in exchange of the 1 lakh rupees. So of course you can do it. If you have a service provider you are, then of course you can provide service for that 1 lakh rupees. So we have to settle the liability, and that liability can be settled through the transfer of economic benefits. That can be your money, that can be in the form of cash or your bank balance, in the form of some goods, or in the form of some services, but we have to pay it. So this is liability, and liability can again be classified into two types. One is the short term liability, and there is a long term liability. Short term liability is only for a short period of time, say 3 months or 90 days. Means you have taken some loan, you have taken some credit from any source, from your friend or from bank overdraft, something like that, and that you have to pay in the within 90 days. So that will be short term liability. And the long term liability, of course you can pay it in a number of years, whatever the period is there, that you can pay. So our liability we can classify into two parts: short term liability and long term liability. Now the next thing topic we have taken is the capital. Capital is the amount invested by the proprietor in the business. Whatever the amount the proprietor or the company owner is giving the amount is giving to the business in the starting, that is known as the capital. Capital can be in the form of money also, in the form of cash also, and in the form of some other things also. Suppose here we have Mr. A, and what he is doing, he is transferring his land. Means he has a land and the cost of land is rupees 10 lakh, and what he did, he just from his personal use to the business. So that 10 lakh rupees will also be known as the capital, because he have invested that amount for the business purpose. Okay. The next thing that we have is expenditure. Expenditure, it means the spending of money or incurring an obligation to pay at a later date. Why do we do the expenses? Why is an expenditure incurred? Because of course we are getting some benefit for it. Okay, suppose you are paying the salary, you are paying the wages. So why are we paying the salary or paying the wages? Because we have got the benefits from it, we have used the services of the employees, and so for that we need to pay them. Okay, suppose you are purchasing something, so that also you need to pay money for that. So why we are paying money? Because of course we have taken something from them and we are going to use it for our benefit. So in all these cases we spend the money. Okay, and spending the money is a spending of money. Or even if you say that you will pay it at a later date, suppose you took something and told that person that you're not going to pay it right now, but you will pay it say after 1 month. Okay, so that thing also will be known as an expenditure, because we have used the benefits of that person, so we have to pay the money. Okay, the next thing that we have is the revenue. And revenue is the income generated from normal business operations. Whatever the business operations we are doing, we are producing the goods, we are selling it in the market, so the income generated from it will be known as the revenue. Okay, so today we have done about 5 things, and these are of course very important topic that we need to study. One was the assets. We study the types also. Then after it we study about the liability, then we study about the capital, then our expenditure, and then our revenue part. Okay, then the next video will be discussing about the basic accounting equation. Okay, so thanks a lot for now. And if you have seen the whole video, and if you just liked it, you are able to understand all the topics, please make sure to like and subscribe the channel. Thank you.